Wall Street is a selling machine. Wall Street is just mechanizing right now to get this product onboarded at wirehouses, brokerage houses, registered investment advisors.
Anthony Scaramucci, in this interview, gets incredibly real about Bitcoin in 2024.
2 years from now, every person that manages wealth in this country will have Bitcoin as a weapon as it relates to tactical asset allocation.
We talk Ethereum ETF.
There's a Wall Streeter that's going to call you and say, you need a 2% allocation in Bitcoin, a 1% allocation in Ethereum. It may switch, 2% allocation in Ethereum, a 1% allocation in Bitcoin.
Top altcoins.
I own Solana, I own Ethereum, I own Avalanche, I own PYR. Obviously, I own a position in Algorand.
Biden versus Trump.
The Biden administration has failed the industry. Right now, if you're a single issue voter, you're voting for Donald Trump. He is pro-crypto.
And so much more. Smash the like button, send this video to the one friend who needs to hear this. Let's jump into it. The great Anthony Scaramucci has a book out now, From Wall Street to the White House and Back, the Scaramucci Guide to Unbreakable Resilience.
I mean, Aaron, come on, look at the airbrushing, the spray tan, I mean, the Botox. I mean, there's a lot going on this book cover. Okay, I just want you to know that, okay?
Exactly.
But thank you so much for having me. You're the man, and there's a lot going on. But, when I was with you a year ago, and I was looking this up in preparation for the show, Bitcoin is approximately 27,000. Okay, today, talking to you, it's 71,000. But the whole complexion and the whole world has changed for Bitcoin. And I would also venture to say for some of the other assets, including Solana, Ethereum, Cardano, etc., Algorand, but it really changed for Bitcoin. And why did it really change for Bitcoin? Because we won those court cases, the industry. I mean, I know Grayscale won the case, but the industry, which was behind Grayscale, those court cases were big leaders. And now you and I think we can comfortably say that Bitcoin is an asset class. I think we can both comfortably say that. And it's being backed up now by research, financial services research, backed up by some of the largest asset managers in the world. So this has been a seismic year. And I'll just finish this statement off with two sentences. Stay long, hold your position, and recognize that there's volatility in the past and likely be volatility in the future, but don't get shaken out of it, because you didn't get shaken out of it. I didn't get shaken out of it. And we and our families and our clients are direct beneficiaries of it now.
I love it. Sage advice. Stay long, stay disciplined. And this is an election year. Crypto is a bigger election issue than it ever has been before. You are a political expert. You are an expert on the crypto industry. So crypto being a big election issue, what do you think about that? What do you notice? What's important to you?
So I'm up against it with my crypto posse, if you will, my fraternity or sorority of crypto people, whether it's Wendy, Ryan Selkis. I don't know where you guys stand on this, but Trump has now come out saying that he's pro-crypto, and he also did offer out very negative tweets as president about Bitcoin and other cryptocurrencies, but he's now done the 180. He's for crypto. And so a lot of people in our industry are going in his direction. And I am a diplomat. I don't agree with Mr. Trump's policies. I have spoken out against them. I have explained that. Having said that, I am somebody that believes in the country and the system of the country. If you're for him, okay. I'm not. I had certain life experiences with him. Guys like Mike Pence who are close to, none of us who work very closely with him are endorsing him. What is going on, though, and I'm writing an op-ed for Blockworks right now, is that the administration, the Biden administration, has failed the industry. And the Biden administration has picked a guy by the name of Gary Gensler who needs to go. He's failed as the commissioner of the Securities Exchange, and he's made the system of regulation in the country way too political. Him and Senator Elizabeth Warren don't like crypto. They won't explain to you why they don't like it. They say it's rife with fraud. It isn't rife with fraud. We've had some fraud in crypto, but there's also been fraud in banks. Billions of dollars have been spent by the banks in terms of making mistakes and so on and so forth. So in quick summary, I'm for Biden because I dislike Trump. I don't want Trump to degrade the system or lead us into chaos as a country. I disagree with Biden on a lot of things. Mayor Ed Koch, the former mayor of New York, once said, "If you agree with me on 9 out of the 12 things, you should vote for me. If you agree with me on 12 out of the 12 things, you need a psychiatrist." Okay, and that's the point about politics. You're never going to find a perfect fingerprint. So what I would say to my crypto bros and my crypto sisters, we can disagree on this, but there's one thing I want us all to agree on, that the regulation of cryptocurrency and the blockchain should not be partisan or politicized. This should not be. This should be a right or wrong thing for the country. We have to work alongside of the Democrats, particularly the younger Democrats that voted for the 121 legislation that Biden stupidly vetoed. We have to educate these people so that when you and I are sitting here 1 or 2 years from now, this is a non-event. This is a burgeoning asset class in the United States. This is where both parties are agreeing that we need appropriate, commercially attractive regulation for the industry. And so what I worry about is all of us are moving for Trump, and I know a lot of us are, and none of us are on the Biden side. We don't want to overly politicize it. It should be a nonpartisan issue.
I like that. Crypto shouldn't be partisan. Crypto's for everybody. It shouldn't be,
Yeah. And I
embraced.
think the Democrats are making a mistake. And when I say 9 out of 12, I agree with them on the preservation of the democracy, the rule of law. I agree with them on the decentralized nature of the government. I don't want 15 million people deported from the country. Mr. Trump is calling for that. I'm sorry, I don't want the Handmaid's Tale armored car arriving in my neighborhood, designating certain people as illegals and pulling them out of the country. Now, some people may want that. I think that would be a real coarsening of the society, and it would create a more wicked society. And I want to live in an aspirational society where people are pursuing the American dream. The flip side is Elizabeth Warren doesn't want you to have control over your own money. Okay, for some reason, she wants to suppress you, and it's you, Aaron, but I'm also saying you in the second person generic. We don't want that. We want people to be empowered with their money. We want people, particularly lower and middle class people, we want them to be able to pursue the American dream. Elizabeth Warren is a self-proclaimed progressive, but in my mind, she's actually a regressive. She's supporting the American Banking Association. She's supporting big scale centralized institutions, and she shouldn't be doing that. She should be for the little guy. You and I are for the little guy, and I'll continue to make that case and continue to fight that fight.
Mhm. But if you're a single issue voter for
Yeah.
crypto, Donald
Mhm.
Trump is the far better option, would you say?
Okay, but let me just flip it back to you. Trump just switched to pro crypto.
Hmm.
You know he was anti-crypto. I know he's anti-crypto. We can show tweets of him anti-crypto. What if Joe Biden, by the end of June, switched to pro crypto?
Thank you, Jesus. I would love that.
Okay, but I'm just saying you're right. The answer to your question, I want to answer the question because I'm an upfront guy. Right now, if you're a single issue voter, you're voting for Donald Trump. He is pro crypto. The administration is anti crypto. However, you and I noticed in the middle of May, it looked like the ETF for Ethereum was going nowhere. And then miraculously, they made a decision to approve those ETFs. Okay, now he said he was going to veto that bill. And so I think he was forced into it. But if you see a sea change in Joe Biden, and again, we just saw a sea change. Politicians are capricious, we know this, and they're weather vanes. Trump is now spinning towards crypto. If Biden spins towards crypto, the industry is won. Because I want to take the industry and the regulation of the industry off the table. This should not be a partisan issue. I'm not saying we're there yet with Joe Biden, but I will tell you that we've pushed the Elizabeth Warren quote unquote anti-crypto army nonsense out of the Biden campaign, thank God. And hopefully that will start to resonate.
Hmm. And full disclosure, I'm not a Trumper. I'm just, I'm pro crypto. Got to ask the
I'm with
question.
you. I'm with you.
And
And by the way, I'm full disclosure. I am not in love with either of these candidates. Just full disclosure. I'm a lifelong right of center person. I mean, I'm social. I'm more of a libertarian. I'm socially agnostic on social issues, and people's right to choose and sexual orientation. That's other people's personal lives. I don't want to be saying what they can and can't do in their personal lives. But I'm also for the democracy. I don't, when I read the Project 2025 and I read the Heritage Foundation's plan for exerting unitary executive privilege, unitary executive power on the society, I don't want that. And so remember, you're safest when there's nobody at the top that has that much control. The founders understood that. The reason why the country's government is the longest standing government right now, 250 years and counting, it has to do with the decentralized nature of it. Autocracies live and die, one party systems live and die. This thing has lived on because of the diffusion. Okay. And doesn't that speak to what the blockchain is and the decentralized nature of these assets? Okay. And this is something people should realize. The reason why Bitcoin is going to be with us, Bitcoin is going to be part of the furniture. Bitcoin is digital gold, or if you're Michael Saylor, it's digital property. Okay, he gets mad at me when I call it digital gold, but it's with us. It's part of the fabric. It's part of the furniture now. And let's not regulate it out of existence because it's not possible to do that. And I'll submit to you this, the regulators didn't want Uber. They did not want Uber. They tried to block Uber at the city level. They tried to block it at the state and federal level. But you know who wanted Uber? The people. People wanted Uber. And so we got Uber. And I think that's the same thing with the blockchain and Bitcoin and these other great assets.
Totally. I was an early adopter of Uber. I wish I would have been that early with Bitcoin. But
Amen.
let's zoom out a little bit from the election. I want to
Yeah.
get your thoughts on traditional markets, how you seeing those playing out the rest of the year. And then obviously the next question is then, Bitcoin with that backdrop. So give us your thoughts on traditional markets. How do you see the rest of this year
Well,
playing
well, first of all, I have been in the camp of that we're going to get two and possibly still three rate cuts. And people look at me like I'm crazy because we were seven rate cuts and then we went to zero rate cuts. I think the consensus now is one rate cut, but I actually think it's going
Still
to be
three.
more than I believe that. Yes, I do believe that. I think they're going to come in the months of October, November, December. And I think what's going to end up happening is the Fed's going to move 25 basis points a clip at the end of the year because they're going to be behind the curve if they don't do that. The economy is weakening. You just saw the data that came out in housing markets. The housing market is slowing down. New mortgage applications, refinancings slowing down. And housing, whether we like it or not, is still a very large heartbeat in America. And I'll just remind your viewers and listeners that jobs are created in the United States by small businesses. Big businesses generally don't create the jobs. They stay at a rough equilibrium in terms of quotas. Small businesses create job growth, and 60% of the small businesses are tied to U.S. housing. Just go down your local main street, you'll see a hardware store, sheetrock guy, plumbing guy. They're all there. There's a bank there that lends out mortgage money to people's houses. There's real estate brokers on that block. And if you look at it, about 60% of it, insurance agents that are selling you property and casualty insurance, fire insurance for your home. It's all there. And when you have a slowdown in housing, you hurt those small businesses. And so the Fed knows this. And I believe that the Fed will start cutting rates. Will inflation be near 2%? And I'm going to tell you something, it already is. And I would ask your viewers and listeners to please go to truflation.com, truflation.com. And what that is a decentralized aggregator of pricing data from around the United States. And you'll see that that number is at about 2.3%. You say, well, why is the government reporting a different number? Well, there's an expression that there are lies, Aaron, and there are damn lies, and there are statistics. So lies, damn lies, and statistics. The government can make these statistics look any way they want, and they change the inputs. So we don't think it's accurately reflecting the drop. It's a lagging indicator, those CPI numbers are using, and we think there's a larger drop. And a result of which I think you're going to get the rate cuts. You get the rate cuts, you're going to get a tear in Bitcoin. You're going to get a tear in risk assets. And I don't even think they're that overpriced. There's a lot of good things happening in the economy, and the earnings have generally been good.
So three rate cuts, get a tear in Bitcoin, get a tear in risk assets.
Yeah. So
That's how you're
Bitcoin's over 100,000 by the end of the year. That's my honest opinion. It's at 71,000 now. And let's just do the math and you'll let you and I do the math together. At 71,000, it's 1.5 trillion. So let's say it goes up 50% from here and it's 105,000. It's 2.2 trillion and gold is at 16 trillion and Bitcoin is only adopted up until about 5% adoption right now. So I don't see how, unless you tell me something that I don't currently know, which again, I've been humbled by life, I've been humbled by markets. So we all know that we don't know. We all know that. But based on my life experience in the markets, I do believe that this is going to go to 100,000 by year end. I just think that there's an overwhelming amount of institutional demand coming into the Bitcoin marketplace, and it's going to affect the other prices.
and 100,000 Bitcoin price, something Bitcoin people have been talking about for years, such a
Mhm.
psychological milestone. Like once Bitcoin clears 100K, dips back down, then pops back up, still, clearing 100K. Do you think that's going to be when Bitcoin kind of enters a parabolic state as people get, feeling
Mhm.
good about it?
Well, you're, you're maybe better at this than me. I do think that can happen. I would say it differently. I would take the Kathy Wood stance. I would say, again, been wrong about a lot of things in life, but let me just say this to you. I would say in 10 years, it is not impossible that Bitcoin could be between six and $800,000 a coin and still be lower than the overall market cap of gold. And I'll just submit this to you. I'm 60. If there's a 25-year-old out there right now that owns Bitcoin, in 10 years, that person's going to be 35. In 10 more years, they'll be 45. That 40-year-old person 20 years from now is going to be very, very comfortable owning Bitcoin. It's going to be very fluid in the digital asset space. And most assets that you and I talk about, real world assets and others, will have been tokenized for a very long period of time by the time we get to 20 years out. So hopefully I'll be 80. Hopefully I'll still be here, Aaron. You'll be interviewing me. I'll have less hair. It'll look the same color. You'll have to talk to my colorist as to why it will look the same color. But I'll be here, I hope, God willing, and we'll be talking about this and saying, we were early and we were steadfast and we were disciplined. And I think our families will be rewarded by that.
Mhm. Yeah, Bitcoin's really been welcomed into the club with these ETFs. And just before we get off of thoughts on this cycle for Bitcoin, what would be your bear case, base case, and bull case for Bitcoin this cycle?
Well, I mean, look, if we have a bear situation in Bitcoin, given that we've had a halving and given that we have this institutional momentum and I don't know, 10 or 11 ETFs in the US, several outside of the US that are generating demand. And if we get some upset of the apple cart, maybe it's God forbid, a terrorist attack or some larger, broader, catastrophic event. Could we lose 50% in Bitcoin? Sure. Could Bitcoin go from 71,000 to 36,000? Sure. Could it go back to 10,000? Boy, I'll tell you, it'd have to be a really rough thing going on in the civilization. The flip side is the rough thing going on in the civilization might increase Bitcoin's value. Right now it tracks the NASDAQ. Right now it tracks an NVIDIA. It feels like a risk on asset. But as it matures, it may start to have non-correlative properties and it may start to look more like gold. But I think downside is down 50%. Upside, you could probably go 4 or 5x from here over 18 months. Not inconsistent what has happened over prior halvings. In fact, if anything, that's on the conservative side as it relates to prior halvings. But the demand is there. I think we took $1 billion into the ETFs on a net basis this week thus far, and the demand is there. And just it's just shortage of supply, not a lot of coins on the wallets of exchanges, and so that could really push the price up. And then there are people that are not believers that are short Bitcoin. And so when you get pressure on your short position, you have a tendency to see gaps. You've had gaps in Nvidia, you've had gaps in Tesla, because you've had a lot of non-believers in those two stories. And when the fundamentals continue to grow and expand, those people that are short are forced to cover, and they're always covering at higher prices there. So that's where the go parabolic could be. You get a combination of fundamentally strong demand for Bitcoin, and then people saying, okay, I got to get out of the way. I'm short this thing. I got to go cover. And so now you have buying coverage on shorts blended in with the fundamentals. That could be really big for Bitcoin.
I love your nuanced answer. Now, let me try and pigeonhole you. You said that your bear case is actually less than, 70K today. 10K not out of the question, but it could half on a bear case. You
Yeah.
said your bull case was
At 5x, 350.
350,
Right.
and then your base case. I think Bitcoin, if I had to like
I
make an
think it's
education,
100. I think it's 100,000 by the end of this year. I think it's 200,000 by the end of next year.
appreciate that. Let's talk about,
And by the way, people get mad at me. Oh, that's euphoria. That's not going to happen. Blah, blah, blah. You and I were together in Los Angeles last year. We had this conversation. Was it on your podcast? And you were extremely bullish long term on Bitcoin. And I don't remember you saying this to me, but you also said it's very hard to predict the short term price movements. But the combination of the halving coming, the likely outcome of a positive ETF story, and I'll tell people why the halving isn't priced in because I'm a Wall Streeter. I'm 36 years on Wall Street. Wall Street is a selling machine. Wall Street is just mechanizing right now to get this product onboarded at wirehouses, brokerage houses, registered investment advisors. 2 years from now, every person that manages wealth in this country will have Bitcoin as a weapon as it relates to tactical asset allocation. And so you're going to walk into a RIA and they're going to say, Aaron Arnold, here's your net worth. This is how we want to manage your money. And we want to put a 2% allocation into Bitcoin. If you get a 2% allocation into Bitcoin across trillions of dollars of assets that are out in the world, this is going to be a home run. And then again, one last point, state of Wisconsin said, whoa, I got to own Bitcoin. They put $160 million into Bitcoin, drop in a bucket for their scale, but they know that Bitcoin's going to end up in a tactical asset allocation portfolio. They do know this. A result of which they also know that if they're not long Bitcoin, Aaron, they're short Bitcoin. So they're building the position now before it gets added. Okay. And that's something people need to understand. That's going to really start to happen at an accelerated pace over the next 12 months.
so there's a lot of reason to be bullish on Bitcoin, and nobody can predict the future price, but there's a lot of reason to think
Mhm.
Bitcoin is bullish, just given
No
enough time,
question.
more and more bullish. And another thing that you told me almost a year ago from this month was while we were on the set of Killer Whales, you said we were talking about Bitcoin, and you said, actually, my company, Skybridge Capital, is one of the first outside investors in BlackRock's Bitcoin ETF, assuming they can turn it into a Bitcoin ETF. And, I want to talk to you now about BlackRock's Ethereum ETF. The industry has progressed so much. Is Skybridge an investor in BlackRock's Ethereum ETF, or how do you think about the Ethereum ETF in general? Because even if you don't think even if you think Bitcoin's a special asset that this has got to be hugely bullish for Ethereum, or what do you think?
Yeah, well, full disclosure, I own Solana, I own Ethereum, I own Avalanche, I own PYR, Vulcan Forge, the gaming token. Obviously, I own a position in Algorand. But I would say, as it relates to Ethereum, it's a blockbuster seismic thing for Ethereum. So Ethereum, again, use the same logic. There's a Wall Streeter that's going to call you and say, you need a 2% allocation in Bitcoin, a 1% allocation in Ethereum. It may switch. You may need a 2% allocation in Ethereum, a 1% allocation in Bitcoin. And you've now made these things very accessible. And let me tell you, who has the money. You know who has the money. The baby boomers have the money. And what are the baby boomers like? Well, they like ETFs. They like CUSIP numbers. Baby boomers don't want to be bothered with, hello, Coinbase, give me a wallet. I'd like to buy Bitcoin from you and put it in my wallet on Coinbase. They like the fact that they can put Bitcoin now on their brokerage statement using the QSIP of BlackRock or Fidelity, or you pick the brand. And so I think it's usually positive for Ethereum. My partner is an Ethereum maxi. One of my partners, my partner Brett Messing, is more of a Bitcoin maxi, but my partner that runs research at Skybridge is more of an Ethereum maxi.
The duality.
Yeah, there's duality, right? But that's the thing. You got to be able to hold a couple of different ideas and arguments in your brain at the same time. You don't have to be that binary about things. So I own both. I'm very proud to own both. And I think Ethereum is going to do very well.
And with the ETF approval, I mean, Ethereum, a commodity, I assume now, the risk dropped a lot, I would think, based on a year ago with Ethereum, now that the ETFs are approved. Would you say that's true? And do you have an Ethereum prediction like you do Bitcoin?
Yeah, so I'm not as comfortable with that. Okay, my analyst, who is my partner, who is a Ethereum maxi, he would say that this will double over the next 12 months. One of the things that he's concerned about, and maybe you know more about this than me because I've been more focused on Bitcoin, is that Ethereum has pretty good to very good tokenomics. If you're staking and putting up your Bitcoin to help confirm transactions on the network, you get pretty good tokenomics, but you don't get those tokenomics. You don't get those staking rights in the ETF. That's something the SEC continues to give the FU to our industry. Okay, and that was one of those FUs that they gave to our industry. They could have allowed these guys to have some kind of staking component, and that would have been better for us, but they didn't. But I still think it's going to have a big run.
Hmm. Hmm. Just a couple more questions as we're wrapping up
Mhm.
this interview. Appreciate your time, Scaramucci.
Yeah,
Guys,
thank
everybody go
you.
follow Scaramucci, linked down below. Buy his book. You already mentioned
Thanks,
some
bro.
altcoins that you hold or you're bullish on: Solana, Algorand, Avalanche. I'd love to hear like your top altcoins. Maybe you already mentioned them and there's no more, but
Yeah.
anything to
Well,
say on both?
those are my top ones. I bought into a smaller one called Parcel. And so the symbol is PARCL. It's a Solana-based layer two, but it is a token. And they are a real world asset token. And they are basically giving you the opportunity to go long or short macro real estate market. So if you own property in New York, but you're worried about the market near term, you could short the New York market using Parcel and using the Parcel tokens. Flip side, if you want to get long it, you could do the same thing. They're in 14 markets now. They've got very robust data in terms of how they're doing the analysis of their index, and it's real world decentralized data. And so we have that as an investment as well. So our altcoin tokens are Avalanche, Solana. I don't know. Would you consider Ethereum an altcoin? I would say no, right? Or I guess so, sort of, because
I
it's
mean,
not
technically, but it's on a different level.
right. Okay, but we own that. We own Algorand, as I mentioned. We own Vulcan Forge because I'm a big believer in these gaming tokens, and I think he does a great job. And we now own this thing called Parcel.
I appreciate that.
That's our exposure, bro.
That's the alpha I was looking for. Thank you. And I guess just thank you so much for coming on today. Please give us closing thoughts, any, best advice for the Altcoin Daily audience or anything you want to plug.
Yeah, well, listen, I'm going to say something somewhat generic, but I think hopefully it'll be resonating. If you're right, don't diversify. And let me explain that to you. There's diversification and there's diworsification. When Warren Buffett got Apple right and it became 50% of his portfolio, he hung in there. You don't trade Apple for four scrubs and call it diversification. He said something in the 90s in one of his annual reports. He said, well, in the name of diversification, I'm going to trade Michael Jordan for four mediocre basketball players. Is that what I'm doing? So if you're listening to this podcast and you follow Aaron and you're invested in what Aaron owns, you're right. Okay, you're right. So don't get scared and don't get scared out of being right. If someone comes to you and says, "Oh, you need to diversify right now and you own Bitcoin," the answer to that question is no, you don't need to diversify. You don't need to. And I think that's a big message. Stay in things.
I appreciate that. Scaramucci, thank you so much for coming
All right,
on.
brother. I'm going to
Uh,
see you at the end of the month, right?
See you at the end of the month for Killer Whales. Thank
All
you,
right.
man.
All right. God bless, brother. Thank you again.